Hey, good morning. Let's go over today's trade plan. So over the last couple of sessions, we've seen a pullback in the equity markets with the Russell selling off the most. So at this point, even though we've seen a pretty decent decline, if we look at what the market's really done overall, we're still trading for the most part in a trading range. Now, we did break below this little 3 to 4 day balance that developed over here. And from there, we went down and tested that 50 to 52 support, found buyers, and now we're back into kind of the recent range, trying to struggle and get back up over here. Now, heading into the open, we know that over the last couple of sessions, we've seen the selling, and there could still be some more selling pressure left in this market. But at the same time, we need to balance that with the idea that we're still trading in a range, that this isn't some large balance breakdown where the market has to trend to the downside, but we understand that there is some weakness, and because of that, we can get some short setups off of the resistance zones, targeting a retest potentially of 50-52, or in the event of some stronger selling, we could get a range extension down to 45 to 47.5, and that's really a very key support in the recent range. On the upside, we have pre-market resistance 60.75 to 62.75. Holding below that tells us that we're holding below this recent 3 to 4 day range, and it would just confirm that the sell side is still pretty active in this market. Above that, the primary resistance is 66 quarter, 68 quarter. We have a key high volume node at 2067 up here. So in the event of a directional move into the 66 quarter, 68 quarter, we will likely see a sell response on first test, and then the market can start bouncing in a range. But holding below pre-market resistance just tells us that this is a very neutral type market, but with more of a sell side tilt. We have now the micro bull bear zone, the micro bull bear line in sand at 54.5. This is really the previous all-time high of 54 that we broke out of, and holding above it would just tell us that the market is lacking the strong sell side pressure, right? So this is not necessarily a level that we're looking to trade off of, but it's more of a reference that if we're holding above it, at the very minimum, it tells you that we could be going back up to 60.75 to 62.75, and then perhaps we get some sell side activity over there. That's something we'll have to gauge in real time. The ideal location for sells is up at 66 quarter, 68 quarter. On the downside, 50 to 52 has already been tested, and we have already seen a pretty decent response from there. If we head back down there, at this point, it may not hold. Now, it's still valid support, but we just have to be a bit cautious at that 50 to 52, because a pullback into that zone yet again would be a second test of that level, and like I said, at this point, it may not provide as much edge because we've already seen a pretty decent reaction there. The next main support idea where we can get a response is the 45 to 47.5, and that's an area where buyers can still be active in the event of a range extension into it, especially if it's more of a directional move into it, so that the market is short-term exhausted as it goes into 45 to 47.5, and even then, the lower edge of the zone near 45 is going to be the better location to take a long setup, because at that point you are going counter to the immediate trend, and you would be going counter to momentum, so you'd want to have really good location if you're going to fade that and enter long. Now in the middle over here, you want to be careful, right? Because there can be continued balance and continued chop, and you just want to be aware of that and not get involved at an area where there really is no edge, where the market can just kind of rotate around it, it can balance, and it can go up 3 or 4 points just as easily as it can go down 3 or 4 points, right? So that's the area that you just want to avoid, and sit on the sidelines and wait until the market approaches an inflection point, which would be up near 61.75, 62.75, or on the downside, near 45, 47, and potentially 50, 52. But you do want to wait and be patient and wait for those key inflection points, or wait for some real momentum to come into the market, because right now there is no momentum. The markets are very balanced as we head into the open. So either you're trading at the inflection point, or you're waiting for some real volume and momentum to come into the market, and then trading in direction of that momentum and expecting it to continue. But until then, it's best to just sit on the sidelines and wait for some clarity on direction. We also have econ out at 9 a.m. Central Time, so the first 30 minutes could be a bit choppy and two-sided anyway. So again, as far as bias goes, it's relatively neutral with a little bit more tilt to the sell side because of the recent selling that we've seen across the markets. But overall, this is not a trend change just yet, right? So far, this is still a market that is very much trading in a range. If you look at NASDAQ, you can see it actually held up really well. Russell was really the one that sold off the most, but we already know that the Russell is the weakest market, and in the S&P 50/52 was a primary support idea from last week. And buyers were active there, so right now the market is very much in balance, right? It's pretty much in a trading range, so it's a very neutral bias, and for that reason, we do have to be very selective and very cautious on where we're entering the trade. Avoid trading near the middle of the overnight range unless it's the start of a directional move, unless it's the start of a high momentum move. Aside from that, we're going to wait for some more clarity on direction, wait for the market to hit a key support resistance zone, and then see if the reward to risk is there to justify a trade. But because the market is in balance and not really in a clear trend, it is better to be selective and patient and cautious. So those are our main ideas heading into the open. Let's just see if the buyers really step in this morning, and let's see what kind of reaction we get at the resistance zones, and we will take it from there.